Welcome, everyone, to another episode of Industry Insiders. Today, I'm joined by Dave Breuner, co-founder and partner at Pacific IOS Ventures, a real estate investment firm focused on industrial outdoor storage properties near West Coast ports and logistic hubs. Dave brings more than 30 years of commercial real estate, capital raising, and financial markets experience to the business. Before entering real estate, he also spent 7 years as a Navy F-14 pilot. Thank you, sir, for your service.
You're welcome.
Dave and his business partner, Andy Martin, launched Pacific IOS Ventures to build on their institutional experience and their family's histories of investing in older and often overlooked industrial properties. Dave, welcome. I appreciate you joining us today.
My pleasure. Nice to be here, Rick.
Absolutely. So let's begin with your background. We'll dive right into here because you took a fairly unusual route into real estate.
Sure.
You grew up hearing about industrial properties around the family kitchen table, became a Navy pilot, and then built a long career in institutional real estate and capital raising. How did those experiences eventually lead you to start Pacific IOS Ventures?
Sure. So, like my partner, Andy Martin, who I started this with about 2 years ago, as I think I mentioned, we used to work together at Deutsche Bank. We had many years of overlap there. He's a bit younger than I am. We always got along really, really well. And we happened to be co-located in the same area here in north of San Francisco in Marin County. We live about 10 minutes apart from each other. And, similar to Andy, we both grew up around that kitchen table talking about older industrial properties. Both of our fathers were real estate investors. Our kind of tagline, big, ugly, and cheap, is something that my dad coined years and years ago when I was a kid. If it wasn't an older industrial property, back then, a lot of the older industrial properties were brick masonry buildings. They were, not reinforced for earthquakes. Environmental issues were just kind of starting to crop up as a concern when you would buy these things. And I spent a lot of my summers driving around with a hard hat on in an old golf cart with acetylene blowtorches in the back, doing demo at my dad's properties that he would buy. I was the demo guy. And so I kind of, fell in love with real estate as a kid, did my military service, and when I got out, I went right into it, sort of full time. Starting out initially as an investment broker, so learning how to sort of look at industrial properties, business parks, retail. I was very active in retail in shopping centers, mostly. I got started in Kansas City working for my father-in-law, my wife's dad. He had a very successful brokerage firm there called Cohen and Esri Real Estate, big brokerage firm, and coming out of the Navy, he taught me kind of the business. And as an investment broker, I learned how to underwrite and evaluate and learn where value was. And from there, I went to work at Deutsche Bank after doing that for 6 years. And that's where Andy and I met. But I had always dreamed of doing what we're doing now. After Deutsche Bank in 2010, 9 years there, I then went into fund placement and got the itch a few years ago. Actually, a long time ago, I always had the itch to start my own little boutique investment firm. And Andy and I came together and we just thought this is the time. And with all of my experience on the capital raising side, when I was at Reef Deutsche Bank, I was on the dispo side for 5 years. So I sold literally hundreds of properties, all product types when I was at Deutsche Bank. At Reef, it was called Reef back then. Now it's called DWS. And, learned a lot of skills kind of along the way to where I am now. And I've kind of come full circle in my career. Andy's the perfect partner for me because, like me growing up around that kitchen table, Andy had been running on the side his family portfolio of an old industrial properties down in and around the Port of LA and Long Beach. And today his family owns 5 properties totaling 60 acres with credit tenants like Con Global and Houston Logistics and JB Hunt. They have a true institutional portfolio of IOS, industrial outdoor storage properties. And that experience combined with my experience, we just felt that was a good partnership. Areas where I'm strong, areas where he's strong, I have less experience and vice versa. And so, he ended up leaving DWS, Deutsche Bank, as portfolio manager for Reef's largest separate account client, Lacera, which at one point was over 4 billion in AUM. So,
Mhm.
he had sort of been there 17 years and had all this experience from an institutional background. I also had that institutional background. And so here we are. And knock on wood, Rick, next week on the 26th of June, we'll be closing our first deal under the new venture, Pacific iOS
Mhm.
Ventures, which we also call, by the way, a successor entity to Andy's family business because we also manage those family assets. So we say that this will be our sixth asset. It's actually the first with us coming together, but six total that we manage on behalf of ourselves and the family business. Sorry, that was
Sure.
a bit long and roundabout, but that's how it all came to be.
Yeah, no, I mean it's always neat to hear a story of partners who knew each other for years
Yeah.
and stayed working together because I don't think that can always happen. So it's kind of neat to hear stories when it does, because sometimes friends who go into business don't remain friends afterwards.
Well, so far so good. We're going on 2 years. If I'm being honest, some of the takeaways, it's been harder than I thought. I'm being fully
Mm,
honest. The last 2 years haven't been the best for real estate markets, particularly industrial, logistics, supply chain. The tariff wars starting last year,
hmm
last spring,
hmm
really, really hurt our industry. It was really hard for tenants, logistics companies, shipping container companies, 3PLs to really sort of underwrite, their real estate needs when there was all this uncertainty around tariffs. And I think most of that is behind us. We're starting to see, it feels really like we've reached the bottom in terms of demand fundamentals in these, strategic markets, coastal markets, Southern California. Our core markets are Southern California, LA, Long Beach, Inland Empire, Bay Area, Portland, which I've talked about, and Seattle. And then inland from there, Salt Lake City, Denver, and Phoenix. So kind of Western US is kind of our backyard, which is where we're focusing all of our energy.
Yeah. Is kind of a key to the areas that you're looking at. This is a little bit off script here, but
Yeah.
around very accessible transportation.
Mhm.
Is that really a focus for you
Sure,
guys?
sure. I mean, iOS is a very broad term. It
hmm
can be for us, the core focus is, trucks, trailers, shipping containers, but it can include, school bus yards, construction, laydown. iOS before, iOS is kind of a new acronym in the last 5 years. People didn't even know what iOS stood for. Or prior to that, it was they were referred to as drop yards or laydown yards. And now it's become its own distinct asset class and it's attracted a ton of institutional interest. But, for us, what makes one of these yards really attractive is obviously location, location, location. It's
hmm
important. Zoning is super important. The other thing that makes it an interesting asset class is the cities don't like these things, generally speaking,
hmm
because they're ugly, right? They
hmm
want to create, they want job creation, they want STEM jobs, they want to develop, new life science projects, things that'll create sales revenue, tax revenue, jobs. And, these iOS yards, particularly in infill markets, the supply is getting smaller, not larger. You just can't replicate a stacking yard where you can stack shipping containers 5, 6 high, in infill locations near ports or
hmm
even inland because the cities don't want them. They're ugly. They rust. And they almost always, even if they're not stacking yards and they're truck parking or trailer parking, they still require you to get a conditional use permit. And those can take over a year. Sometimes you don't get them at all. So it
hmm
makes it very difficult
hmm
to underwrite an acquisition for a property that is not zoned by right. That's one of the things that appealed to us about this Portland acquisition is it's in it's in the Port of Portland. It's north of downtown. It's in the heaviest industrial zoned part of the city that they have. And you can stack containers there. You can build a cement plant. You can store chemicals. You can do anything that's heavy industrial there. And that's a distinct advantage. Also, we love the cost basis. We can come back to that if you want to, drill down on our first deal. But Yeah, location is super important, because these trucks and trailers, the drayage costs are really expensive if they're sitting in traffic or if it takes them a long time to get on a major highway or interstate. So hope that answered your question.
Yeah. Well, let's say when you look at an old factory or a neglected industrial
Yeah,
site
yeah.
or an environmentally complicated property,
Complicated. I like how you said that.
yeah. How do you distinguish a genuine opportunity from a property that just carries too much risk to it?
Well, so I think, given our backgrounds, Andy and I can see through the clutter, so to speak. We like to say that, these properties oftentimes are, a true diamond in the rough. And you have to see beyond the old, tires, the old tanks that are sitting on the surface that are rusty, all the weeds and brush. A lot of these properties have improvements on them. This Portland deal is an old pickle factory. It's 15
Hmm.
acres. It's got a 75,000 foot old, probably over 30-year-old industrial manufacturing and warehouse building on it. Vagrants got in there and stripped out all the wire. So we're having to put 3 million in CapEx into it. And I think you have to think sort of like an architect where, an architect that's been hired to renovate, a home that a lot of people maybe thought was a tear down. And to have that
Hmm.
vision to see through the clutter and understand its underlying value fundamentals, such as location and zoning, and how many curb cuts does it have? Is it median restricted? What is the underlying demand look like? If you're buying it vacant, what is the lease rate? And understanding how to underwrite all the CapEx improvements, including the acquisition costs and the downtime, and come up with a thoughtful, conservative underwriting model that takes all those risks into account is part of the secret sauce. And
Sure.
so, we pride ourselves on being able to do that.
So back to that Portland facility, the pickle
Yeah,
factory.
sure. The pickle factory.
Yeah. So what did you and Andy see in this property that made you believe your strategy could succeed where the previous plan that
Yeah.
the
So
previous
this,
owners had for it?
so this kind of
Yeah.
gets back to the big, ugly, and cheap thing that we
Yeah.
talked about earlier. That was my dad's kind of motto that we've adopted, stolen. Nowadays, big and ugly kind of is applicable, but cheap, maybe not so much. But in the case of this Portland opportunity, it was a failed development deal. It was institutionally purchased by a developer and an equity capital partner in 2020, right before COVID. And they're industrial, Class A industrial developers. And their plan was to demolish, the improvements that are there now, improvements that we're going to keep and renovate, by the way. Their plan was to demolish it, put in a new 250,000 foot Class A distribution building, potentially a cross dock, go through the entitlement process and build it. And then but there were still some tenants that were on the property. And long story short, by the time the tenant leases burned off and by the time they got their entitlements to redevelop it, coming out of COVID, the market got really soft. And so they kind of sat on it and tried to lease it as is, but they didn't want to put any money into it. Long story short, we're buying it, for a really, really attractive cost basis, under $10 a foot for 15 acres. And we're getting a free building in the process, albeit the building and the parking and the yard, and it's going to need another 3
Needs a little
million in
help.
capex. And so, we feel like going forward, because of our really attractive cost basis, even taking into account the potential downtime, we're able to generate really, really strong kind of mid-20s IRR on this property, assuming, with a year's downtime. And, we can be the low-cost leader in Portland for both warehouse and for outdoor storage. It's only 10% coverage on the 15 acres, so we can lease it to two people, we can sell it to users, we can subdivide it. So we have a lot of flexibility. So anyway, again, long answer to your question, but those are some of the fundamentals that we saw in this opportunity, and we are acquiring it with a capital partner, a small insurance company called Emeritus, and we hope it's the first of many with them. We have other capital partners that we've got term sheets with, different risk profile than the one I just described. More
Hmm.
kind of core plus-ish to core with those guys, but Yeah, we're hoping to build on this, and we think coming out of this, when we make a splash on LinkedIn and some of the industry rags when we put out our announcement, we think will give us some additional momentum and credibility in the market to buy
Hmm.
something that was pretty hairy and actually do what we said we were going to do.
Apply your vision to it is essentially.
Yeah.
Yeah, yeah, absolutely. Repurposing buildings and areas that everybody didn't even want to look at anymore. Like you say, the cities don't want them because it's not the big
No,
shiny windows and
correct.
skyscrapers and
Correct. I mean,
pretty.
Andy's first property that his dad bought in 1980 was a 25-acre landfill. I won't tell you what he bought it for because you wouldn't believe me.
Pennies on
And
the
it's
dollar.
and now it's 100% leased, and I won't tell you what it's worth now either as a
Ah,
fully stabilized asset. But suffice to say that the IRR on that property is infinite.
off the charts. So, for much of your career, you advised investment managers, raised institutional capital, and
Mhm.
evaluated strategies from the capital side of the business. Now you are the person making the investment and operating decisions. So
Yeah.
what have you learned from moving from the advisory and capital raising side to the ownership side of the table?
Yeah. So that's a great question. Sometimes when we talk to capital partners, I get asked that same question. I think again, having, that 9-year period on the institutional side at DWS, Reef, Deutsche Bank, combined with sitting at a table like I'm at right now with LPs as a fund placement agent on the advisory side of the business for 15 years, raising money for real estate, equity, real estate debt, infrastructure funds, real asset funds. I've literally sat through thousands of pitches with clients that we were raising money for and LPs, mostly pension funds,
Hmm.
endowments, some family offices, and hearing these clients, these GPs pitching their strategy, I developed a really keen sense for what works, what doesn't, and how to pitch your strategy because I got to see it literally 1,000 times. And so I think I have a good sense for what resonates with LPs or capital
Hmm.
partners and being able to, maybe I'm not doing a good job of this right now, but being able to articulate your strategy concisely, because usually you have 45
Yeah.
minutes to an hour and then the door closes and you got to get through it in that time frame.
Yeah.
Understanding what's relevant and being able to establish a rapport, a level of trust, making that, having a good first impression when you're talking to somebody new for the first time. Look, forming joint ventures or raising fund capital, it's all about trust. It's all about
Hmm.
a relationship. At the end of the day, it's a relationship business. And if you can't connect with somebody on a personal level, it becomes very difficult to convince them to give you millions and millions of dollars. And so I think I saw that also. And, speaking the institutional language and having the chops to really understand underlying value in particular deals and understanding the risks and being transparent about communicating those risks with capital it's crucial. And I think, I've had a lot of time to sort of hone those skills and understand those fundamentals.
Yeah, absolutely. You explained it very well. I can completely see how you being from both sides of the table,
Yeah.
you know what they're looking for and
Yes.
how they want to be told what they need to know.
Yeah.
And I could
And
see
that's
that
where
being
Andy and I really complement each other, Rick.
okay.
Is I too like 60% of the talking, and
Hmm.
Andy brings to the table all that asset management, that portfolio management. When he was a teenager, he used to drive a dozer on his dad's landfill. So you talk about being down in the weeds, the nitty-gritty aspects of buying, like his family bought an old rock crushing plant in amongst one of the refineries down near the port of Long Beach and Los Angeles. And, Andy's driving around dozers as a teenager. He really understands, and he's got an amazing sort of Rolodex of broker relationships up and down the West Coast. In addition to being portfolio manager at Reef for Lacera, he was also one of the senior asset managers for the West Coast. So he knows all of the brokers up and down the West Coast. And I know a lot of them also back from my Reef Dispo days from
Hmm. Hmm.
2000 to 2006. So,
Sure.
we complement each other.
Yeah. No, it sounds like it, which kind of brings us into the relationship side of things. So you're emphasizing, relationships with
Yeah,
brokers, tenants,
yeah,
and vendors as an important sourcing group.
yeah,
As more institutional money enters iOS,
yeah.
how critical are those relationships to finding opportunities before they become well known
Yeah.
or widely marketed?
Yeah, so as you can imagine, and everybody says it. Everybody says, I want to, I'm looking for off-market deals. Like, name one acquisitions guy at any firm anywhere in the world who doesn't start a first conversation with a broker saying, we're looking for off-market deals. Like,
Hmm.
hello, like you and
Hmm.
everybody else. But to be fair, we're two guys in a pickup truck. Andy and I, along with a lot of our equity capital partner, relationships. It's hard for us to compete against the Alteras and the Zeniths of, V Ventures. It's hard for us to compete with the guys that have large funds of discretionary capital. We have to kind of do it the old-fashioned way, deal by deal, in traditional one-off JVs. And which isn't to say that we won't, go up against other, competitors in a fully listed opportunity. Our Portland deal was listed by JLL, by Buzz
Hmm.
Ellis. And we beat out other potential, buyers for that deal, and we got it for less than what the cover bid was. Not the cover bid, but the number one bid, because we understood the environmental better than anybody, and
Hmm.
we took the
Yeah.
time. We even spent money with an environmental attorney so that when we had that buyer interview, we had every answer. And so that's how we can distinguish ourselves in a situation like that, even if it's listed. If we get in early, and we're able to sort of underwrite the opportunity from every element, whether it be seismic, environmental, market leasing demand, actually getting there in early to tour the property and truly understand it better than other competitors. That's how we can differentiate ourselves. So, we've chased a lot of off-market deals, and the success rate on those is very low. Because usually, a broker, will say, "Oh yeah, I know this, private owner. He said he would consider an offer. He's owned this for 25 years." And, of course we say, well, what sort of pricing guidance are they looking for? Well, take a
Right.
guess. Do
Right.
you think that the pricing guidance is ever less than what investor market value is? Or is
Hmm.
it typically 30 to 50% more?
Yeah. Yeah.
And that's
Well,
really frustrating. Sometimes these things are owned by multiple family members, and
sure.
they're not fully aligned in what they want to do. We had price agreement on one of our early deals last year on a 5-acre site in Gardena, credit tenant, new 5-year lease. We had price agreement with two of the family members, and the third family member thought we were lowballing them, and we weren't. And so that deal fell apart. And looking back on that, that was a year and a half ago. I'm kind of glad we didn't buy it at the price that we were underwriting to, because the market got even softer. So even though it's taken us longer than we thought, one way to look at it is, that's probably a good thing. Because I truly believe we've reached the bottom and we're on our way up. There's all kinds of strong leading indicators that are signaling that industrial demand is picking up. And,
Yeah, I think
and by
I
the way,
see those
Rick, I want
too.
to also say we don't just invest in pure iOS. We can invest in traditional industrial buildings. I mean, like this Portland deal is a hybrid. It's got a 75,000 foot warehouse building on it that we're
Hmm.
renting.
Hmm.
If it was a medium coverage site that had value where we could bring our skills to the table, absolutely we can buy multifamily if we wanted to. We joke
Yeah.
about that.
Yeah. Yep. Cheap and
Us,
ugly.
thanks for
Cheap and
me.
ugly, no matter what it is.
We are the investment committee.
You are, absolutely. So the industrial storage, outdoor storage, is receiving far more attention than it did several years ago. Does that increased attention validate the asset class, or does it also make it more difficult to find investments that still meet the cheap portion of your strategy?
Well, nothing's cheap anymore. So everything is priced on a relative basis, right?
Yeah.
So I mentioned to you our Portland deal, we're buying for $10 a square foot. That same 15-acre property in Southern California, there's a property right now that They're in the buyer interview phase. It's about the same size. Near the port, it's a complete teardown redevelopment opportunity. Pricing guidance for that is between 70 and 80 bucks a foot. And it's a full teardown with probably a couple $1 million in demo. It's about 50% coverage. It's rail served, it's very strategic, and it'll be bought by somebody like Prologis or I don't know, JP Morgan or one of the big guys.
Some big one.
Put a new big distribution building on it. And it'll take, 2.5 to maybe 3 years to get through the full entitlement process. That's not a deal for us. But in that situation, that same price per square foot in LA Long Beach is 7x what we're doing up in Portland.
Yeah.
So the cheap,
yeah.
But coming out of COVID, that property would probably be priced at well over $100 a foot, maybe even more. So it's all relative. It's all, value is fungible. It all depends on what are interest rates, what's the demand, what's your exit, what are your exit assumptions? What's your exit cap rate? What's the going in interest rate? Is there going to be leverage? Are you going to buy it all cash? All those things come into play. And you can still generate value in a place like Southern California where the price per foot is higher, cap rates are lower.
Mm-hmm. Mm-hmm. It depends on how much capital you want to tie up at any one time, right?
Yeah.
So trade policy, port volumes, and supply chain changes can affect the businesses that use these properties. How quickly do changes in tariffs, imports, or supply chain strategy translate into actual demand for outdoor storage space?
Yeah. So, policy changes tend, it's sort of like turning a battleship. It takes time. And when you have policy changes, by the time it trickles down to the regional manager who's making real estate decisions, those tend to take time. However, we never saw anything like the shock to the system we saw 15 months ago on Liberation Day when Trump came out with all the tariffs against friends and foes.
Mm-hmm. Mm-hmm.
And the impact of that was immediate.
Yeah.
And, those regional managers or those small business owners that were making real estate decisions suddenly were filled with fear and anxiety about committing themselves for 5 years with so much uncertainty around what their business looked like going forward.
Mm-hmm. Mm-hmm.
There was a small moment in time where, and you don't see these very often, bonded warehouses were a thing for a short period of time where people could import merchandise from overseas into a bonded warehouse and not pay import tariffs on that merchandise until such time as it actually left the bonded warehouse. And so there suddenly became like this heightened interest in where can I find a bonded warehouse? Well, guess what? They're few and far between. And the red tape involved in getting the entitlements to receive that designation, it takes months. It's a lot of time. It can take over a year to get, these designations from the government. And, we're not seeing people talking about that anymore. But if you did have something, either a yard or a warehouse that was fully bonded, that's a true differentiator because who knows when this might happen again.
Yeah. Does that follow the property or does it follow the ownership?
I've heard it can be both. I'm not an expert. It's not something we've pursued. I think it can go both ways, but I'd want to research that more.
Yeah. That'd be an interesting.
I think it might go with the particular tenant or I don't want to speculate on that because I'm not an expert in that area, but I'm going to defer on that question.
Yeah. So you describe Pacific IOS as two guys in a pickup truck,
My
but
wife
you are
gets when I
also
say that.
like it though.
You're like, don't tell people that.
No, I mean that's people can relate to that. Let's put it that way. But you're also bringing institutional experience and specialized tech into the company.
Yeah.
You mentioned that you already selected an AI platform designed for commercial real estate investors and operators.
Yeah.
Where do you believe tech can to give a small firm capabilities that were previously available only to the much larger organizations?
Yeah, that's a great question. So I started using AI about 6-8 months ago. And initially I started using ChatGPT like instead of Google. And I'm like, wow, this is amazing. And then all of a sudden I started, playing around with it for our business. And I probably use it 5 times a day now.
Mm-hmm.
And it has replaced, and we've outsourced some underwriting and modeling with some guys who are experts in that are not employees of our firm, but we tap into them on a part-time basis. We've been doing that for the last 6 months. That's been really, really efficient for us. We've created some really excellent sort of underwriting models that are very bespoke to our business. But there's no question that AI is replacing the need for real estate analysts meaningfully. Because, 2 years ago, it might take an analyst 3 full days to get market comps, leasing comps, sales comps, market leasing demand statistics, zoning information, CUP requirements, CUP applications, forward-looking demand fundamentals. I could do that with AI in 10 minutes.
Mm-hmm.
And we just recently signed up to a cutting edge literally this week. In fact, my hard stop is in 20 minutes because I'm doing an onboarding training session with a platform that we just signed up for called Plex AI.
Mm-hmm.
And it is phenomenal. It can do all those things. It's on one platform. It can do, we pay for Argus every year. For one license, it's $5,000 for Argus.
Yeah.
And, Andy's the Argus guy because he did thousands of Argus runs when he started at Deutsche Bank back in the day. And we're dropping Argus because this new platform is going to allow us to do everything that Argus did. Plus, it'll create IC memos for us. It gives us all the, rent and leasing comps to the extent that they exist publicly. It can give us all the zoning information. It can create PowerPoint presentations for us. It'll help us sourcing deals. And, it's expensive, but it also can be very bespoke, and they will tweak it, to our needs going forward. And so I think AI, there's other platforms that are out there. There's another one that's out there that's on LinkedIn. You see a lot right now. It's AI, it's Claude for AI, for CRE, for commercial real estate. And I think it's going to revolutionize the business. So yeah.
Yeah, it can shave a lot of time. A lot of research time, a lot of document prep time,
Yeah.
a lot of presentation creation time.
Modeling, Argus
Modeling.
is laborious. And with this new platform, and hopefully an hour and a half from now, I'll be even smarter on the capabilities than I am right now.
Mm-hmm.
We've already bought and paid for it. And it'll also allow me to model, opportunities very quickly because, we don't want to be spending another $5,000 for a second seed license for Argus. Because we're not using Argus enough to justify that added cost.
Right.
And there'll be more coming. I mean, AI, we've only scratched the surface of where AI is going. In every industry, right? Across the globe. CRA is just a small sliver of what's being created right now that's cutting edge, and it's exciting.
Yeah, no, it's exciting at the same time, a little bit terrifying. Sometimes you're a little, I find some companies afraid to make the investment because they're afraid of what's going to come next week after they've already paid and installed this.
And to be fair with AI, it's not 100% accurate.
No, it's absolutely
not. And I've seen mistakes, but where it's been here's another example. This property in Portland has 20 years of environmental history with half a dozen different phase 1 and phase 2 environmental reports that have been conducted over a 30-year time frame.
Mm-hmm.
And with all kinds of data from, test borings and whatnot. And the ability to sort of load that in and compare and contrast and really help get your arms around sort of the entire history of the property and legal document review, summarize this, create a lease abstract from this 50-page lease document.
Right.
Now that stuff you have to double check it.
You do.
Because it does make errors, but you can do it much faster.
Sometimes when you prompt, when you're working with either Chat or Claude or one of the large language models, you have to prompt it to say, do not make up any numbers.
Hmm.
And that can
Sure.
stop it from, and because it will make up numbers. If it doesn't have a number that it can find or that it thinks it needs, it'll make one up.
Yeah.
So, people are sometimes very concerned that AI is going to take all these jobs, and there'll be some transition in that, but at the same time, AI still needs to be observed by a human. So it always.
I agree.
Let's see. So closing the Portland transaction would represent a major milestone, create the first deal for you guys under
Yep.
Pacific iOS. Once that transaction is completed, what does the next stage of growth look like for you guys?
Well, we've already got a pipeline of other opportunities that we're looking at. And the beauty of doing the beauty and the curse, doing one-off, JVs with institutional partners. This particular one in Portland, we're doing, on a 90-10 basis for the equity. No debt, it's all cash. The beauty of being able to do one-offs is, we can tailor our capital partner for the risk profile that capital partner is looking. So we have some groups that we have term sheets with that are looking for more core plus, others that are looking for core plus plus. And this, like the Portland deal, is heavy value add, heavy repositioning, almost opportunistic return profile. And so, we've already created a press release for the industry rags, as well as another one that's tailored for LinkedIn that's more personal to Andy and I, that'll launch, next week or the week after. And we hope that people will view that as a real milestone for our business and provide us with a lot of credibility that we're able to acquire a very complex deal that other people wouldn't touch, given the heavy lift and the environmental. And in the Pacific Northwest, the brokers already know about our transaction, for this deal, because everybody knows about it. It's
Sure.
not a lot of 15-acre pickle factories that have been on the market for either lease or for sale for the last 3+ years.
Yeah.
So we're the guys buying it. So the fact that we're able to buy it from an institutional seller, close on it, we think will give us a lot of credibility in the market, not just in Portland, Seattle, but really in our on the West Coast. And so be on the lookout.
Yeah.
Be on the
That's what
lookout on LinkedIn.
Yeah. I mean, what you guys are doing is gotta, if nothing else, create a lot of curiosity
Yeah.
in the sphere, I mean, with investors and any capital partners and whatnot. They gotta be looking at this and thinking, well, gee, these things can work.
Yeah, well, proof's in the pudding, right? We're
Yeah.
just, on the front end. It's going to take us to get all the permits and approvals and all the bids solidified from all the different trades. We want to add a curb cut on the north part of the property. That's going to take some brain down. That's going to be a lot of work with the city. We want to subdivide the properties so that we can split it up and sell one or both of them to users. That's an obvious strategy that operators do. That's also going to take some time. We've hired Colliers to be our leasing agent up there. They're also managing the property. We hired construction management. We reel it from Colliers. We have boots on the ground up there. Jerry Matson's our leasing guy up there. We're very fond of Jerry, and he's a huge producer in that market. And we're very grateful to JLL, to Buzz for supporting us in the acquisition of the property.
Yeah.
So, it's exciting.
Okay. One last closing question.
Yes, sir.
What is one lesson about real estate investing that took you a long time to learn, but now influences nearly every opportunity you evaluate?
Wow. I would say, having an eye for underlying value is critical. And like things that we talked about before: access, demand, leasing fundamentals, hiring the right team, assembling, we interviewed architects, we interviewed brokers, we interviewed construction managers. We met with a lot of subs to understand, do we need to replace this roof or not? And so I think for us, being able to quickly analyze whether a property is properly valued or not saves us a lot of time. I mean, I looked at an
Hmm.
opportunity in Phoenix yesterday. It's a big property. It's chopped up into a bunch of small tenants. It's a multi-tenant property, way below market, gross leases, not net. It's a heavy lift to reposition it. And I'm like, well, what sort of going in cap rate, are they looking for? And the guy starts laughing, the broker, it's off market. He's like, well, it's a going in two cap. And I'm like, two cap? Like if you'd said 4.5 and it was below market, I would have thought, okay, maybe. So, understanding quickly upfront whether there's real value, notwithstanding all those other physical attributes, understanding whether there's real value in terms of what seller expectations are before you
Sure.
spin your wheels and waste a lot of time is part of the art.
Hmm. Hmm.
It's part of the art, part of the science and underwriting, opportunities quickly and efficiently. And, when you're resource constrained, by the way, we hope that's short term now that we've got momentum. Let's do this again in a year, Rick. Let's see
Yeah,
where
we'll
things
see where you
are
guys are sitting. Absolutely.
and see what new lessons learned there are.
Yeah, yeah, let's put it on the calendar. Well, thanks for joining us, Dave. Was a very informative discussion.
Oh,
Um,
my pleasure.
yeah, you had a lot to add here and helping. Thank you for helping us understand the industrial outdoor storage, the iOS
Of
space,
course.
and this is of course
And
was a new
traditional
asset
industrial.
class. Yeah, right. Yeah, absolutely. So again, thanks for joining us. Wish you the best with Pacific iOS Ventures, and everybody should be keeping an eye on you guys and see what kind of exciting
Heck
stuff you do
yeah.
next.
Heck yeah. We're going to be the next Blackstone.
All right. Thanks
All
again,
right.
Dave. Take care.
You have a great day, Rick. Thanks again for reaching out.
Absolutely.
I've
And
enjoyed
thank you,
this.
everyone. You bet. Thank you,
Okay.
everyone, for joining us.
Yeah.
And we'll see you next time.
Yes, sir. Okay. Cheers.
All right. Thank you,
Bye.
sir.